Hello student, this is Ankit Shukla, and in our previous lecture we have finished the chapter Basics of Accounting. In today's class we are going to start another chapter, which is chapter 1 in the book that you are having. Okay, the name of the chapter is Evolution of Accounting and Basic Accounting Terms. Okay, so let's see how accountings evolve. So I have categorized evolution of accounting in two categories. Firstly, we will see evolution of accounting in world. Then we will move to how evolution happened in India related to accounting. Okay. So around 4000 before Christ, some evidence were found in which it has been seen that accounting was present at the time at that time. Okay. And those evidence were found in Egypt and Babylonia. Okay, so Babylonia was known at that time. Babylonia was known as the city of commerce, right? Okay, so you can see on the board I have placed a picture related to that evidence, right? Okay, when we talk about India, how accounting evolved in India, or what was the first thing that we have seen about accounting in India. So that was, you must be knowing Chanakya. Okay, Chanakya is also known as Vishnugupta and Kautilya. Okay, so Kautilya or Chanakya written a book on based on Arthashastra. Arthashastra means economics, right? So Chanakya has written a book, Arthashastra. Okay, if you search on the internet like Kautilya ka Arthashastra, okay, so you will find many books related to that. Okay, so around 23 centuries ago, Kautilya or Chanakya written a book Arthashastra. Now the book is named as Economics or Arthashastra, but in this book Chanakya has explained many things related to administration of government and related to money management, related to accounting, etc, etc. Okay, right, so that was related to evolution of accounting in India. Okay, so I hope this topic is clear to you. There is nothing to explain so much about this. You can read it by yourself on the first page of your book in the first chapter, right? Okay. So after understanding evolution of accounting, let's see another topic, which is history of present accounting system. Now let's first understand what is accounting system. We are knowing that what is accounting. So we are knowing that accounting is a system, accounting is a process with which we want to know the profit or loss of any business. That is the thing that we are already knowing. Okay, means accounting follows some system, some method with help of which we find profit or loss of the business, right? Now various people follows different kind of method for reaching this ultimate objective of knowing profit and loss. There are various methods of accounting. Okay, there are various methods of accounting. So we can say that the evidence that were found in Babylonia and Egypt around 4000 before Christ, they must be following a different kind of method of accounting. Okay, in India earlier we were following the Munim system of accounting, or you can say that Indian system of accounting. Okay, which the Sahukar and Mahajans in India were following. Okay, so that was Indian entry system of accounting. So there are various methods of accounting. Okay, so if we classify that, as one is known as for India earlier, not now but in ancient time in India, at the time of British rule, you can say, the Indian merchants, Indian businessmen were following Indian entry system. Okay, that was also a method of accounting which was followed by the Sahukar and Mahajans in our country, right? That was Indian entry system. So there is one more system known as single entry system. Okay, single entry system. And the same way we can say that at the time of that Babylonian people and Egyptians, they must be following a different kind of method of accounting, right? But what the present system, what the present accounting system, or we can say the present method of accounting, which is following worldwide, okay, and that is most popular, and we can say that approx everyone in today's time is following that method of accounting, is known as double entry system. So we are going to see the history of double entry system or the history of present accounting system. Okay, so let's see. So there was an Italian mathematician named as Luca Pacioli. He was later on a Franciscan friar also. So what friar means? Friar means we can say that hermit means tapasvi, sannyasi, etc. Right? So there was a person Luca Pacioli. Okay, he was an Italian mathematician. In 1494. He has written a book named as The Communicity Scriptures, right? The Communicity Scriptures. That was the first book on accounting subject. So he was the person who first used the concept of double entry system. Okay, so he was the first person who wrote something firstly on accounting subject. That's why he is known as the father of accounting. So if someone asks to you who is the father of accounting, you can mention that Luca Pacioli, right? By the end of 16th century, this double entry system was not that much popular, but later on it was discovered in Europe and other places as well. And presently it is the most popular method of accounting which everyone is following. Okay, in our book also we will study double entry system, that what double entry system is, and how to do accounting with the help of double entry system, right? Okay, there is a separate chapter on double entry system also. In his book he has explained the concept of debit and credit, which you will understand later on in this chapter when we understood accounting question chapter, right? Okay, so after writing this book, later on the double entry system got popular, and later on various accounting experts have developed many accounting principle which is known as general accepted accounting principle, and we will study a separate chapter that what are the accounting principle, what are the concept and convention which everyone follow while doing accounting, right? So there is nothing much to explain. Okay, so I hope the topic of evolution of accounting and the history of present accounting system is clear to you, right? Now let's understand the second part of our chapter, that is basic accounting terms, right? So before starting this topic, let's understand what is the meaning of basic terms. See, in every subject there are certain terms which used in that subject, okay, and that is very frequent in use, and that is related to the study of that subject. So for example, if you go to any medical shop to buy some medicine, and if you ask about some medicine to that seller, and let's suppose that seller has not availability of that particular medicine, but at that time he has a similar product which have the same formula, the medicine that you asked. So what he will say? He will say, sir, that the medicine that you are asking to me, that is not available with us, but we are having another medicine with the same formula, right? Okay. Now the thing is, how he came to know that this medicine will also work, right? Because he was knowing that this formula is used for this particular disease or for this particular purpose, right? Same way, in every subject there are certain terms related to the study of that subject. Okay, so in our accounting also there are certain terms which will be used in this chapter and will later on will be used if you continue your study in accounting. Okay, that will be used in your further studies in accounting. Okay, so let's understand one by one the terms that is given in our book, right? In today's class we will understand 5 basic accounting terms. Okay, from these 5 we have almost understood 4 things. We have understood business transaction, event, voucher and capital already, but let's revise these terms. So the first term is business transaction. Okay, right. So now what transaction means, sir? We have already discussed about it. I have told you that any human activity can be categorized in 2 ways, right? Can be categorized in 2, right? First one is economic activity, other one is non-economic activity. Now what is economic activity? Economic activity are those activities which are done for the purpose of making profit. Okay, so if you are doing any work and the objective behind that doing is related to earning some profit, you have a motive of making some profit, that activity will be classified as economic activity. So for example, a doctor is treating his patient in his clinic, that will be an economic activity, because behind that treatment the objective of the doctor is to make some money, to earn some profit, right? So that will be economic activity. But the same doctor, if he treat his child at his home, behind that treatment now he has no objective of making profit. Okay, so that will be non-economic activity. So we can say that the basic difference between classification of an activity between economic and non-economic is very simple, and that depends on objective. If your objective is profit motive, that will be economic activity, and if your objective is not make any profit, that will be non-economic activity, right? Okay, so I hope the economic activity is clear to you, right? Now, what transaction means? Transaction is very simple. Okay, so because of any economic activity, if you make any economic activity, right, and because of that economic activity, your financial position got changed, right? We have already understood, sir, what is the meaning of financial position. We have understood that in financial position there are two things. Okay, knowing financial position of a business means knowing the situation of assets and liabilities of the business. Okay, and we have already understood in the very first lecture that why it is necessary to know the financial position, right? But for the time being, we can classify financial position is to know the position of asset and liabilities, right? Okay, sir. Now what the thing is, what transaction is, because of any economic activity, if any economic activity change financial position of the business, that will be a transaction, right? How, sir? Let's take an example. Say for example, you purchased some goods for your business, right? And that goods were worth, let's suppose, rupees 20,000. Okay, let's see whether that is a transaction or not. Okay, so the first condition that we will check is whether that transaction or that activity is economic activity or not. Okay, so you have to see only one thing. What was the purpose behind that activity? Why you bought some stock? We bought some stock, sir, because we want to sell that stock at a higher price. Okay, right. So we can say that behind this purchase, our motive was to make some profit in future. So we can say that purchase of goods worth rupees 20,000 is no doubt an economic activity, right? Okay, that was our first condition. Okay, but we have to check a second condition also to verify that whether that is a transaction or not, right? Okay, so the second condition is we have to see that whether because of this economic activity is there any change in the asset or liabilities or not. Okay, so let's see, if you purchase a stock or goods of 20,000, it will affect your asset. How, sir? When you purchase goods of 20,000, you will pay cash of rupees 20,000. And cash is a asset. So we can say that because of this purchase, our cash will be decreased by 20,000. There is a change in the asset. Same time, there will be increase in an asset also. That will be our stock. The stock which is purchased is our asset, no doubt. Okay, and that will increase. So we can say that because of this activity, there will be two change in our asset. One asset will decrease, which is cash, and the second asset will increase, which is goods. So we can say that it is fulfilling both the condition, first whether it is economic activity or not, second whether it is changing the financial position or not. Okay, right. So because this is following both the condition, we can say that it is a transaction. Okay, so I hope now you can identify whether any particular activity is transaction or not. The only one line you have to remember for explanation of business transaction is business transaction means any economic activity which change the financial position of business will be a business transaction, right? Okay. Now let's move to our second term, which is event. So event is a very simple thing. The only thing that you need to remember is what is event, sir? Event means result of transaction, right? Okay. What is event? Event simply means result of transactions. Whatever transactions we are conducting, we just understood how to identify any transaction. Okay. So whatever transaction we are conducting, the result of that transaction, the result of not one transaction but of transactions, means two or more than two transactions. Okay. So the result of transactions will be event. How so? Let's see. So for example, let's again take the same example. We purchased goods of, let's suppose, 5,000 rupees. Okay. That is transaction we just saw. Okay. Now let's take another transaction, which is sold goods of 3,000 rupees. Now that is again a transaction. Why so? Because we are selling goods that will change our asset. Cash will increase and stock will decrease. There is a change in the value of two assets. So we can say that both the activities are transaction. Okay. Now let's see the event. What is event? Event means result of transaction. Okay. So if you see, you purchase goods of 5,000 and out of this 5,000 you sold goods of 3,000. So now you are having a stock of 2,000 rupees. That is our closing stock. So this closing stock will be an event for the business. Okay, right, sir. There can be other results of transaction as well. Say for example, we purchased goods of 5,000 and we sold this 5,000 of goods at a price of 6,000. In that case, that 1,000 of profit will also be a result of transaction, and that profit will be event also. Okay. So I hope these two terms, business transaction and event, are clear to you. Now let's move to our third term, which is voucher. Okay. So now what voucher is, sir? Simply, we have already discussed this one also. Voucher is proof of transaction, right? Okay. We have understood voucher when we were discussing the process of accounting. The second stage or the second step in the process of accounting was preparation of voucher. We have understood already the meaning of voucher. What the voucher was, what the voucher is. We have understood that vouchers are proof of transaction. Whenever you whenever you go to a place to buy something, you get some receipt of that purchase. That receipt, that bill of transaction is known as voucher. Okay, means whatever the bill you received for your shopping is a voucher. Okay, now what voucher is? A voucher is a proof of transaction, and with the help of voucher we record transaction. We have discussed this at the time we were discussing process of accounting, that with the help of voucher we record transactions, right? Okay. So I hope voucher is also clear to you. Now let's see the capital. So capital is a very simple thing. You have to remember only three words. That is contribution of owner, right? Means whatever the thing owner is giving in the business will be known as capital, right? Now here contribution can be of two types. Contribution can be in cash or contribution can be in kind. Okay, right, sir. Let's take an example. Say for example, owner has given 5 lakh rupees in the business. So no doubt that will be capital. Why, sir? Because owner has given something, owner has contributed something, and that contribution was not by any other one, that was by owner, right? So we can say that 5 lakh will be capital of the business. Okay. Same way, owner can give something in kind also, right? So for example, owner was having a van and owner has given that van in the restaurant business. So the value of that van was, let's suppose, 6 lakh rupees. Okay. So owner has given a van worth rupees 6 lakh into the business. So that 6 lakh will also be capital of the business. Okay. So the simple thing that you need to remember is, what is capital? Capital means contribution of owner in the business. Okay, right, sir. So let's see the last term, which is asset. We have understood asset means anything which is cash or which is not cash now but which is convertible to cash. Means if we want, we can convert it in cash in future, right? So what is asset, sir? Asset means something which is already cash or which is convertible to cash. So for example, the cash that you are having, the bank balance that you are having, okay, the check you received from someone, all those things will fall under the category of cash and that will be asset. Now what is convertible to cash? So if you are having something, okay, and if there is possibility that you can sell that thing and you can get it converted into cash, you can classify that thing into asset. So for example, I am having this marker. If I want, I can sell it for some money. Okay, so whatever money I will receive, okay, that will be ultimately in cash, right? So we can say that because this marker is convertible to cash, this marker will be my asset. Okay, same way you can classify everything, the building that you are having, your furniture, your equipment, your machineries, these will be assets, right? Okay, so we can say that asset means anything which is cash or which is convertible to cash. Now here I want to add one more thing, with the help of which you can receive some future benefit. Okay, sometime in your business there are something which are neither cash nor convertible to cash. Still there are some future benefit involved in that thing. That's why we will classify that thing into asset. Now what are those things? So let's take an example. Say for example, you paid advance to someone, right? You paid advance of 2,000 rupees. Now you have already paid this advance. Okay, now if you want, you cannot convert this thing in cash. You cannot take your money back, right? Okay, of course you can take your money back, but normally in our business we don't take our money back if we have given advance to someone for supply of goods to us, right? So if you have given advance to your supplier, currently that is not convertible to cash, but in future you are receiving some benefit from that thing. Okay, you will receive a stock, so that will be asset. Same way, say for example, you paid advance salary to your employee. You paid advance salary to your employee. That advance salary is now not convertible to cash, but in future that will give you some benefit. Your employee will work in next month without any pay because he has already taken the payment. So we are receiving any future benefit. We can classify also that thing as asset. Okay, so I hope asset is clear to you. Asset means anything which is cash or convertible to cash and which gives us some future benefit. Okay, right. Now there are some classification of asset also, that is fixed asset and current asset or non-current asset as current asset. Okay, so that thing we will discuss in next class. Okay, that's it for today's video. Okay student, thank you.